Alright guys, so far this year, I've been finding some success day trading micro ES futures. Currently up a little over 17% in returns so far this year, and that's by taking one trade per day if a setup presents itself, and risking 1% of my account per trade, and this day trading strategy has earned me some prop firm payouts. I also want to make it clear that I'm not indicating to anybody how to trade or how they should trade. This is simply just how I've been day trading as of so far this year. I've also been day trading for about 5 years now, and I still consider myself a beginner in this skill. So if, let's say, you haven't achieved any success similar to what I've indicated in this video, maybe these videos might be able to help you, and that's why I'm making them. If you haven't watched the video before this about my continuation setup, you're going to want to, because the continuation setup is the type of setup that I look for first every single day. And if, let's say, price continues to move and we don't get a continuation setup, we're going to look for a reversal setup, which is what this video is going to be about. Reversals are much less likely than continuations are, so check out the video before this if you haven't. Also, I do have a private Discord. If you're interested in joining it, it'll be the first link in the description. Now, in the previous video, I also indicated how to set up your chart. I'm not going to go over that again in this video, and we're just going to get right into it. Now, if you've seen the most recent video, you'll know that the first thing that we have to do every single day is we start off on the 15-minute time frame. And for today's trade example, I'm going to be heading back on the chart here to the 6th of May, earlier last month, and we're going to be using this as our reversal example for today. This is the most recent reversal I believe I've taken. So it's been nearly a month since the last reversal trade that I've taken, so that you can see that reversals are far less likely than continuations, and we're going to go over exactly why in this setup. So what we're going to do is we're going to zoom in here to the 6th of May, and we're going to start off by highlighting the first 9:30 a.m. New York time 15-minute candle with our rectangle tool, which is going to represent our opening range. And next, we're going to drop down to the 5-minute time frame. Once we're in the 5-minute time frame, the first thing that we have to do is we have to wait for price to break out of the opening range through either the top or bottom. In this case, price breaks out of the top, and we're also witnessing price being above the VWAP line indicator as well. So what this tells us is that we're most likely going to be taking a long today, and that we're probably going to be waiting for a continuation setup. So what we do is we wait for price to have a pullback and for a confirmation candle to appear, but this doesn't really ever happen, and price actually continues to climb and climb and climb and climb. The first rule when it comes to reversals is if, let's say, price continues to climb without stopping and gets to the point where it's 30 or more points above the opening range, typically it's safe to say that price would most likely at some point run out of gas and attempt to return back to either the VWAP or opening range. This is why I call the setup a reversal, because we're trading the reversing of price back down if it's climbed too high early in the session. Now, I've taken some reversal trades that were much higher above the opening range, in some cases 70 points or 100 points above. Price action was crazy early in the session, but in this case, price action just barely reaches the 30-point area above the opening range, and so it's at that point that I'll probably expect a reversal. When it comes to the continuation setups from the last video, we need to wait for price to break out of the opening range, then for price to pull back, and then for a confirmation candle. Reversal setups are a bit similar, but there's a bit of a different order to these things. The first thing that we need is for price to get up at least 30 points above the opening range area, which we have now. Next, we need what I call a sign of reversal, which is, at the very minimum, at least 2 consecutive candles in the opposite direction that price has been moving in. In this case, this right here is our sign of reversal. So price has climbed, it's gotten tired, and it's printed 2 consecutive bearish candles to the downside, one of these candles being a fairly powerful candle, a bearish engulfing candle to the downside. So this is going to be our sign of reversal. This is the second thing we need after price getting 30 points or more above the opening range. The next thing we need after the sign of reversal is a pullback. In this case, it's a pullback in the opposite direction, which is up. And for a pullback, I need at least 2 consecutive candles in the opposite direction, which we get here. If, let's say, there would have been more than 2 consecutive candles, that's perfectly fine, as long as we get at least 2 consecutive candles for a pullback to the upside. And it's at that point that we can then start to look for a confirmation candle. Now, once again, if you haven't seen the most recent video on continuations, you're going to want to check that out. Most of the things that I'm indicating in this video are fully explained in that first video, and if you don't don't know how to take a continuation setup, you certainly won't know how to take this reversal setup either. None of these bearish candles here in the beginning are powerful enough to be considered a confirmation, but this one certainly is. Large, fairly small wicks on top and bottom, fairly full candle body, and as we already know, I would be entering this reversal short on the close of this confirmation candle. For a stop loss, I would be pulling it up to the top of the pullback that we just experienced to the upside. This gives us a 9-point stop loss. For take profit, I'll be pulling that down to make this a 1 risk to reward ratio trade. When it comes to risk management, I do have a strategy for risk management, although it is something that I've already explained in the continuation video prior to this one, so that's another reason to check out that video as well. We didn't get any chance to actually use our risk management strategy in this trade, but it did end up being a winning trade, and we were able to short micro ES as it reversed back down to the VWAP line, as you can see here. Now, if you guys wanted a series of screenshots of price as reversals occurred, I actually have this to provide. It's the first link in the description to my private Discord, and there in the photo section, you can actually choose the photos channel, and you can search for reversal trades. And then all of the different reversals that I've posted here will appear, and you can actually study this material to see exactly what reversals look like, what the signs of reversals look like, what the pullbacks look like as well, and what different confirmation candles look like too. So all of this material here is for everyone to study, and there are multiple examples of what reversals can look like that you guys can review. Once again, first link in the description. And this, guys, is essentially the end of the video. It's fairly simple, just like the continuation setup as well. In my Discord, I also post a trade breakdown video of every day trade that I take, along with the screenshots as well. So if you're interested in that extra content, go ahead and check it out. First link in the description. Otherwise, this is the end of the video, guys, and I hope you guys all enjoyed, and I'll see you all in the next one. Thanks for watching.